talk about the property market now, not the listed property market, the residential property market. What's happened over the last 10 years? Quite a lot, apparently. In the studio in Johannesburg is John Loos, property strategist at FNB Home Loans. 10 years, you say here in the report you kindly sent us earlier on, John. Past 10 years of boom, bust, and then sanity. Has there been a boom? Has there been a bust? And why are we saying now?
Lindsay, where were you the last 10 years? Yeah, it's actually amazing that 10 years have passed since we started this analysis already. But it's been action-packed. I'm probably glad I gave up being a macroeconomist and witnessed all this cycle. When we started our research 10 years ago, the property market was inflating. The house price inflation was around about 35%. Widespread speculative activity because you could get cheap money, lot lower interest rates, massive capital growth, speculators' paradise. There was buyer panic. Buyer panic being where first-time buyers are desperate to get in quickly before they can't afford it anymore, and a massive buy-to-let boom. So there was a very significant market overshoot at some stage, maybe just a bit there after 2004. And then, of course, it all ended in tears, very much so. 2008, negative or price decline, oil price, global food price shock, Rand's slump, Lehman Brothers collapse, a whole world recession, brought things to a sad ending. And then we recovered quite nicely, but there's no boom. Certainly I'd call it sanity now. Very well-balanced market, single-digit house price growth, and everybody in the market is fairly comfortable at the moment. So we've had pretty much a bit of everything over those 10 years, and I can't imagine that sort of volatility being prevalent over the next 10 years.
Let's talk about the next 10 years. In particular, are there major trends that you could point to and say that this is what you think the next decade is likely to look like?
Well, I think firstly, in terms of the cycle, the super cycle, if you could call it that, I think we're still due for some real price correction. In other words, I think maybe after next year, at some stage, there's more building activity. Looks like it's coming on stream next year. I think that will alleviate supply constraints, and then we'll probably have a good, bouts of low price inflation, below CPI, and so you get this long-term real price correction. I think that's still due. I don't think we ever properly corrected downwards after the boom, because the Reserve Bank's big cuts in interest rates stopped a lot of that. So nothing exciting in terms of boom times that I can foresee for the foreseeable future. The excitement then changes to the other challenges we have: urban densification, mounting congestion, how to replan our cities, public transport corridors with much denser living along there. And then, of course, what to do, how to reshape these former black townships. I think it's long overdue, away from being dormitory towns where people by and large sleep and then commute long distances to elsewhere, more towards mixed-use type of suburban economies, basically, such as like the former white suburbs are.
Well, there was a talk basically that there needs to be that mixture between the high end and the low end, and also in some of the suburbs in Johannesburg, you've seen obviously subdividing, and secondly also people just renovating their homes. What do you think is going to really likely to happen, if I follow on what Nozi asked to say, in the next 10 years? Do you believe that a government is going to really look to say, let's mix between your high end and your townhouse type of dwelling?
I think firstly, there's been a lot of talk about trying to create more affordable housing around the major business nodes of the country. Now, you can become more affordable by high density, so I think we've got to go up. A lot more apartment living there too, because land is very expensive. I can't see that it's going to be that easy around these expensive areas of this country to create affordable, low-cost housing. I don't think so, because once it's on the market, the prices would be driven up. But in any case, I don't see how that would very much help the former townships. I think really what we need to think about is bringing more of the economy the township way, making them mixed use, slowing down that need to, or reducing that need for people to commute long distances. I think that's really a potential solution. And then to create public transport corridors with very good, very effective public transport, high density along those corridors to create the mass demand for that public transport and make it more viable. Those are potential urban solutions I think we've got to look at.
John, you're not a sensitive fellow, so you won't take this incorrectly. I mean, the property, any property barometer over the last 10 years is about as useful as the all-share index of the JSE. You think of the all-share and you think, oh, well, it's a barometer of what South Africa's companies are doing, which of course it's not. Some are overseas, most are overseas, some are in South Africa. So give us an idea of whether we should be looking at the barometer in terms of Clifton or Camps Bay, just down the road here from CNBC Africa's palatial Western Cape studios, or whether we should be looking at a mining town which is down in the dumps. One would have gone up 10% last year, the other down 10%. What's the reality? Where should we be?
Well, Lindsay, yeah, I mean, it is useful to look at national average trends because there are a lot of things, you know, national events that drive all property markets, such as interest rates. That's a very strong driver, to name but one. And normally, you know, most areas in that boom, most areas of the country were booming, and in the bust, most areas were pretty flat. So there is a national cycle and it affects most areas. But yes, our barometer is nationwide. We break it down into provinces and regions as far as we can go, and that does help, and into segments as far as we can go. And those are worthwhile looking at too. They're all pretty even at the moment. Nothing's really outperforming the other by a massive margin. Former black townships slightly better in terms of house price growth, former holiday towns making a bit of a comeback. But we are limited, admittedly, in the sense that statistically you get to too small a sample size when you get down to suburban level and the like to have data series, to have a data series that's meaningful. So therefore we sort of stop it at a certain point. And the segments are useful. Ideally, when you get down to area level, you pretty much have to start talking to local property experts in that area to get an idea of what's really going on. Unfortunately, data is limited.
John, I think that's a good comeback. Another one that I must clarify with Lindsay, palatial CNBC studios in Cape Town. I think I'm working in the wrong part of the country. I must come down to Cape Town. There's nothing palatial about what I thought was down there, Lindsay. But anyway, a big thank you to John Loos, property strategist at FM.